Monday, December 1st, market analysis, Stan Ehrlich. I was gone last week for Thanksgiving with the family, and I'm back. And guess what? First of all, let me say I start with indexes, go to futures, and I've got a few stocks I'm following as well, typically popular ones. Now, I come back. Last week, of course, was Thanksgiving week. Most markets are closed on stocks and stuff Thursday, but some were not. Depends upon the exchanges and the commodity and the kind of market. Regardless, I got either 4 or 5 days of the data that I wasn't paying attention to because I didn't want to. What we have now is a rally in the stock indexes that was a little bit larger than I was expecting, but I was expecting it because of the oversold conditions and the support levels that it had reached. So it went up a bit further than I expected. But guess what? I realized that Wednesday, Thursday, Friday of last week, if the market we're looking at happened to trade on Thursday, which is the case on the MES, we have what I think is a shoulder high. This is developing, obviously not finished yet. The last shoulder high was either today or Friday. Today meaning yesterday afternoon when the futures contracts start trading, but today's the date on the daily data charts, even though it started trading yesterday afternoon on Sunday. In some cases, that's the highest high, and we had some bearish engulfings. The MES has an outside down day. Now, the reason it's not red, like the 2 days at the very top of the market, my bearish engulfing ER sell signal picked the top of this market so far and extremely close to the highest high on the first shoulder as well. If this is a head and shoulder top, now I'm going to look at this pattern through all of the indexes to see how they match up. And it's not bad. I'm kind of excited about this. If that's all true, then what you do is you take the highest high and you go down to, okay, just a second. There we go. You go down to the neckline, and that is the depth of the formation. You grab, whoops, I grabbed the wrong thing. Sorry about that. Grab the depth of the formation and kind of take an educated guess as to when it might break out in the near future. And oh, I've already done this. So if this dotted, dashed, thick yellow line, the neckline is broken, which is almost flat, just very slightly downward slanted, we will all of a sudden kick in a downside of minimum objective of 61.35. In the meantime, I don't want any higher highs than today's high or Friday's high, depending upon which contract you're looking at. This could be the last shoulder high. What I do like about this is the neckline is relatively flat in every case. The timing is relatively good. It's about a week late or maybe a little less than that from what the timing would have been perfectly, but you rarely get them to be exactly symmetrical. Number of days on the first shoulder of the head and from the head to the last shoulder is the exact same amount of time. But as long as it's pretty close, good enough. And the price levels of the rally were a little bit higher than you would expect because the price level rally high on the first shoulder is oftentimes extremely the same as the last shoulder high. This one was a little higher, but still not too much. And now we're getting sell signals. Bearish engulfing ER sell signal. It was not because we were not overbought, but it is a bearish engulfing. You know how I like those. Timing is about right. Price level is about right. The only thing I don't want at this point is for it to get above or close above, especially the high of Friday and or today, depending on which one's the highest high. So this could be on its way down. That's exactly what I'm implying. Support is obviously at the lows of the break after the first shoulder high. That would be October 10th, and the low of the break before the last shoulder high, which was Friday or today, and that was the date of November 21. Those two levels constitute the 2 points at which you draw the neckline across, and that's upward slanted or downward slanted most of the time, a relatively mild amount, not too radical. This is great. This gives me a fantastic setup, by the way, for the Santa Claus rally, which I will start talking about now. We buy one third, and one third of our position one day before Christmas, trading day before Christmas, 2 trading days before Christmas, and 3 trading days before Christmas. I'll give you the exact time of day that has been the most profitable over the last several decades between now and Christmas. We liquidate or place a trailing tight sell stop underneath those lows starting on the first business day of January, second and third business days of January for one third, and one third the position. That's pretty much it. Buy just before Christmas, sell at the very beginning of January in a broader general sense. Back to these charts. Next. The 1 minute. Oh, we got 5 minute. We got 5 minute data here. Starting to break down a little bit. Not super convincing, but it was a bearish engulfing day. I like that. And you have to consider the fact that Friday was a short, in some cases, trading day, shortened trading day. Now, no bearish engulfing on the SPY, but starting to break down. Everything else is essentially the same. 5 minute chart, starting to break down a little bit. Not profoundly so far, but I am thinking that's about to happen tomorrow. Next. Bearish engulfing and the QQQ, but not overbought, so therefore it doesn't turn red. Shoulders about the right height, very close. Timing is a little bit late, but not too bad. It looks like this is the last shoulder high. It's my favorite pattern. I've probably seen thousands of these over 53 years I've been involved in the markets. My favorite pattern. Next 5 minute chart. Just barely starting to break down a little bit, but we really need to close below today's low and or let's say Thursday and Friday. Next. Daily data NQ. MNQ. No difference. Bearish engulfing. Closed a little lower. Not super profoundly. Doesn't look obviously super bearish, but that's what I'm saying. I think it is. Next. 5 minute chart. We got the YM. Head and shoulder top. In this particular case, I'm not sure exactly what I should be doing here. Let's just lop this over a little bit like that and grab this and pull this over like that. Is the head of this formation really a sort of a double top? Maybe. Do I have a bearish engulfing on the first high? Oh, heck yes. Second one simply got overbought a new high ground and collapsed immediately. I'm calling this one the worst example of the several at the moment in the indexes. But, basically the body parts are there. Neckline looking good. Reversal starting to happen. Blah, blah. Let's see how this pans out. Definitely starting to make lower lows for the last couple of days the quickest. Russell. All we got is a major resistance area that's stopping the rallies. It held support before I left. Great. Perfect. And oversold. Super turnaround. Classic. And now I think it's ready to start slipping again. Head and shoulder top. I really can't justify that, frankly. So this one doesn't count. And we're going to go to the 5 minute, excuse me, which is starting to break down, in my opinion. Bonds. Wow. Big down day, over a point. All of a sudden, bonds have given up the rally that ended last week with a bearish engulfing on Friday. And boom, today. This is almost exactly what I think might happen in the stock indexes. Kaboom. And bonds just did it today. Do they have a head and shoulder top also? Oh, yes. First shoulder high, bearish engulfing RSL signal. Unfortunately, not the highest high, which was overbought. Neckline slightly upward slanted, absolutely textbook classic. And we almost got down to the neckline today, all of a sudden. Breaking below the neckline on a closing basis, has to be closed, provides a downside objective around 112.10 or lower. Down in that area, 111.5, you've got a major bull trend line. And that's where I think we're about to go. Russell Index, excuse me. Yeah, this is the bonds and Russell, okay. Notes, 10-year notes have the same pattern. Neckline, breakout, I'm guessing a week. Downside objective, 110.5. Also, if you like a double top story, the downside objective is just a hair lower at 110.12. They match up. They're about the same. The neckline is almost flat, just upper slanting a little bit. Watch out here. Bonds and notes. Tierra del Fuego. Crude oil. Sideways. Rally up to today. Resistance stopped to rally, but we're nowhere near overbought. It could move up a bit more, but we're really trending lower, fairly slower over time. So I think today's high at resistance might be a turning down point. I'm not quite sure. My convictions are not very strong at the moment in crude. Next, heat, natural gas. Higher high, higher close, breaking through a little resistance. This could pop up a bit more. This support level that it came down to in August and October have held pretty well. We have made higher highs. We got overbought. It pulled back for a few days, held at support twice, and now again. So I've got to be friendly here. This market looks like it could pop up. Oh, I don't know. Gosh. Okay. 1.5. Next. Heat. Still bearish. Kind of, sort of, not a very good example. Double topped out. Overbought on the second high. No bearish engulfing, unfortunately. Looking for a little bit lower. Not even close to oversold, so there's elbow room on the downside. Modestly bearish for the moment. Maybe down to 2.11. Next. Overbought today, first day in gold. And it challenged a previous high a couple of weeks ago. Did not pass the test closing above that old high. Therefore, overbought, failure to hold, closing a little higher. I think today's a minor top, probably going to dribble back down off to 40, 55-ish. Next, very overbought silver, closing at 86 on the RSI. Remember, ice cream bloody murder when we get to 90 or higher. This is a very high number, worth pointing out. The last time we were up here was on these days, and the market did have a bearish engulfing. It didn't work, unfortunately, so that's not a real good example. But usually when we get this high, market at least flattened out here. And again over here, topped out for a few days, came back. And back here, topped out a little bit and came back. This is a very strong market, obviously. But this kind of extreme strength over a 2-day period looks like a blow off top, especially with an 86 RSI. Watch out. This is about to top out. Platinum, overbought last couple of days also, but barely getting up toward those old highs. Lower close. RSI got as high as about 83. Probably turning around. Maybe coming back down to 15, 19. Next, high grade. Triple top potential. Very rare pattern, so probably not. Not overbought, but came awfully close with a 74.66 high on the RSI. And remember, 75 or above is my overbought. And I learned RSI from Wells Wilder himself. So I'm looking for a minor high here and a little bit of a pullback. Soybeans and grains. You know, I'm bullish, intermediate to long term. I've been saying that for maybe a couple of 3-4 months, or even longer, quite a while. We got a great green buy signal at the very bottom on that break, at the very bottom on that one on that break. New highs for months and months, well over a year. and a third. Downside retracement last week or two held at support. Today's an outside up day, bullish engulfing. I'm sorry, bearish engulfing. Sorry. So we might see another test of support around 1114, and I certainly can't rule out a little bit lower down around 1090. But somewhere in that ballpark, if it gets down that low in the next few days or a week or two, I do expect it to hold, turn around, trend higher. Soybean oil, all the grains are about the same, but they have some potentials of dribbling back off a little bit for a few days or a week or two and then going back up. I am not long-term bearish on any of the grains. Short-term, a little bit reactionary, but basically still long-term bullish. So it's a matter of figuring out where the lows might occur on the way up, basically. And I wouldn't be surprised to see this come back down to 49.5 again. Soybean meal, minor head and shoulder top, very small, took 1 month to form, but I can't rule out it looks too good. Shoulder, head, shoulder, timing is almost perfect. Neckline slightly upward slanted. Today, big down day, obvious technical breakout. It's working perfectly, but the downside objective at 300 is not that big a deal. We're at 314 already. It could get lower than 300, but that does begin pretty good support. So that's what I'm looking for, and then up. Next, corn. Really can't make a case for top formation here. The left side is kind of not too great. So sideways to a little bit lower short term, but higher later, soon, next, by the end of the month. Wheat, a little lower, maybe again, testing support, and there is that gap to close at 529 a quarter. So if that's closed and we turn around, that'll be it. Up we go. So I'm slightly bearish to close the gap. Next, Apple, overbought today. 81, new high close. Some elbow room for higher prices. But watch out, I don't like buying when the market's overbought. That's not usually a good idea. I'm looking for sell signals. Tesla, a little bearish engulfing. Slightly lower close, not very convincing. Generally resistance in a broad sense. Neutral to a little bit bearish. Next, NVIDIA, still neutral to a little bit bearish, trying to come back down into support again, I expect, except today we did bounce off the support and we do have a bullish engulfing, so let me amend my comments. Sorry about that. This looks like, frankly, it's going to rally up a little bit first, but for how long and how much is very important because we have been seeing, after overbought conditions, lower highs, lower highs, lower highs, and lower lows. So it's chewing its way down a bit. AMD, bullish engulfing, ER buy signal officially bullish. It was 5 days ago within the range of number of days back that it was oversold. Now a bullish engulfing candlestick has turned green. I expect to move back up to 226 3/4 minimum, probably back up to at least 241.5. Next, MES, we're back to the beginning here. Glad to be back. Talk to you about the Santa Claus rally later. You guys have a great day and profitable trading to you.